Are you someone who is interested in trading? Then derivatives is something you must definitely know. To start with, derivatives are financial instruments that derives its value from an underlying asset. The underlying asset could be an equity share, index, interest rates, or other financial securities. Derivatives plays a crucial role in trading. It helps in managing risks, speculating, and hedging. Now let's know what are the types of derivatives. Forwards. Forwards are customized contracts between two parties to buy or sell an asset at a predetermined price in the future. These contracts are tailored to the specific needs of the parties involved and are traded over the counter. Although they do not guarantee profits, they are ideal for hedging risk. Futures. Futures are similar to forwards except they are standardized and are traded on regulated exchanges. These financial contracts obligate the buyer and seller to transact the asset at a predetermined price and date in the future. Since futures are traded in the market, it is more liquid than forwards. It is widely used for speculation, risk management, and price discovery of commodities. Options. Options is another derivative contract. It gives the buyer the right but not an obligation to buy or sell an underlying asset or financial security at a predetermined price on or before a specified date. Options offer flexibility and are used to hedge against market volatility, speculate on price movements, or generate income through premiums. Swaps are derivatives that allow two parties to exchange cash flows or liabilities over a specified period of time. These agreements are usually used by traders and investors to manage risk, hedge against price fluctuations, or speculate on price movements. Swaps are typically traded over the counter rather than on organized exchanges, which gives the parties more flexibility in customizing their terms of agreement to meet their specific needs. Each type of derivative serves specific purposes in the financial market, which allows the participants to tailor their risk exposure and investment strategies according to their needs and market conditions. Understanding these derivatives is crucial for making informed decisions in the market. Do follow Zebu for more such awesome contents.